What are the alternatives to 401 degrees Kelvin early withdrawal? What are the alternatives to early withdrawal from a 401k plan? If you are considering tapping into your retirement savings before reaching age 59 and a half, it is essential to know the costs involved. Early withdrawals typically incur a 10% penalty tax, plus you will owe ordinary income tax on the amount you take out. This can significantly reduce your retirement savings, so let's look at some better options. First, maintaining an emergency savings fund is a smart move. Aim for 3 to 6 months of living expenses in this fund. This way, you can cover unexpected costs without touching your retirement accounts. Using this cash means you avoid penalties and taxes, plus you keep your retirement savings intact. If you own a home, consider a home equity line of credit or a home equity loan. These options let you borrow against your home's equity, often at lower interest rates than personal loans. Depending on how you use the funds, the interest may even be tax-deductible. This route does not trigger penalties or taxes related to your retirement accounts. Another option is to take a personal loan or establish a line of credit. While interest rates might be higher than secured loans, this method allows you to access cash without incurring penalties or taxes from early withdrawals. If you have a permanent life insurance policy with cash value, you can borrow against it. This option provides funds without immediate tax consequences, but be aware that it will reduce the death benefit of the policy. You might also consider withdrawing from a Roth Individual Retirement Account. Unlike a 401k, you can generally withdraw your contributions from a Roth Individual Retirement Account tax and penalty-free at any time. However, if you withdraw earnings before age 59 and a half, you may face penalties unless certain exceptions apply, like first-time home purchases or qualified education expenses. There are also specific circumstances where you can take qualified early withdrawals from a 401k without penalties. For example, expenses related to birth or adoption, total and permanent disability, and certain medical expenses can qualify. Some 401k plans allow in-service withdrawals or loans after age 59 and a half without penalties. If you choose to take a loan, remember that you must repay it with interest, but it will not trigger taxes or penalties if repaid on time. In summary, before considering an early withdrawal from your 401k, look into these alternatives. Using non-retirement funds or penalty-free options can help protect your long-term savings and ensure you are ready for retirement. Early withdrawals should be a last resort, only considered when no other options are available.